Hey guys, how's it going? Welcome to the London session recap for Euro Dollar Monday the 19th of September. So today is basically a bank holiday in the UK for the Queen's funeral, so there was the expectation before the session occurred that there would likely be lower volume. Now, lower volume doesn't mean that price won't move a lot, because obviously, it can move, you never know. It just means there's going to be lower volume in the market. And the reason why price can still move a lot is because even if there's less volume, there's less orders. Well, if price starts to move and there's an imbalance between supply and demand, price may actually have to move a lot further, i.e. be more volatile, to find where those next orders are in the market to rebalance price. So yeah, bank holidays don't always mean that price action will be slow and corrective, but it's just something to be aware of. So, I'm not going to spend ages breaking down hard time frames because David did a great job of that on the weekly market breakdown. But as we know, the weekly has broken past this major monthly level. So at some point we may see that deeper pullback. It's kind of been falling reasonably, there's not big swings in the weekly price action, right? Like, how we have over here. So at some point that may start to kick in, but I'm not too bothered about that. For now, I'm just going to keep following this very, very clear bearish order flow. Last week, we can see we came up into this, again, somewhat minor weekly supply level, right? It kind of just a little bit of a pullback, just about caused price to close about below this low. Not that convincingly. Either way, it's some weekly supply there. All right, price tapped into there during CPI, had a pretty strong reaction. So from a weekly chart perspective, the simple forecast would be we're probably going to expect that low to go, right? Not going to overcomplicate that any more than it needs to be. Daily chart, again, reasonably simple, right? Longer term, bigger picture is obviously very, very bearish. We had this clean swing pullback, and then we eventually got the break and closure below, and we're now trading between this swing high and this swing low. So we did break this internal high to the upside, okay? Well, let me keep it even more simple. Just from a swing structure perspective, what have we had? We've had a pullback to premium level of supply. So the very simple expectation from a swing structure standpoint is that that lower high may now likely be in place because we've rejected premium supply, and we may now ready to continue that move to target the weak swing low, right? That's what we'd expect from a swing structure standpoint, okay? We've had a nice strong reaction from that supply level and a decent move down, so you'd expect potentially we're going to come into this low, right? From an internal structure perspective, we have had a break and close, above this daily internal high, right? So the daily structure, the daily internal structure is now bullish. So although this is a weak swing low, it's a strong internal low, right? Because the internal structure is not aligned with the swing structure. The internal structure is bullish. So what can happen from an internal structure perspective is we could be pulling back to form a daily internal high low to then continue to the upside, right? So we get the continuation of the daily internal trend to facilitate a deeper swing pullback, right? Because we could come up towards this premium level of supply, right? We may come in like this and mitigate here, right? So the internal structure stays bullish to facilitate that swing pullback, and then if we mitigate this extreme supply, and then we get that daily bearish IBOS, all right, sorry, ignore these black lines, they're just annotations that kind of glitch out. But yeah, once we mitigate that daily extreme supply, and then we get the daily bearish IBOS, that will then confirm, it will give us structural confirmation that that daily swing pullback is over, and then we'd expect those daily strong internal lower highs to hold, right? Because they're strong highs because they took out the low. We'd expect those bearish ranges to hold until it takes out the swing low, right? That's kind of the perfect framework in which we use if it was to play out like that. Of course, it doesn't have to happen, right? Although we do have the bullish internal structure, right? We could just dump through because swing structure is king. Swing structure is more important. But it's just something to be aware of, right? And essentially, that's why at the moment we have the 4 hours bullish and the daily swing is bearish, because that's essentially your 4 hour swing high and a swing low. And that is one possibility that could happen. Currently, we're sitting in that daily demand level. Very, very minor daily demand. All it caused really is a bullish choke, and I guess it caused the IBOS as well, right? But this is where this would, you would expect this to overpower that ultimately, just because daily swing structure is key. So this is where it's kind of hard to see what happens. I don't know. Things aren't aligned, so you kind of have to take each day as it comes, and that's just the nature of the beast when we don't have full structural alignment. But if you're ever unsure, what I always fall back to is swing structure is more powerful. So in theory, the path of least resistance ultimately should be to the downside, but I'm aware that we could have, because we've had that bullish IBOS, we could have another leg to the upside, right, up into here. Just something to be aware of, and that will make even a lot more sense now when we look at the 4-hour chart, because the 4-hour chart switch bullish over here. So this is our swing low, and this is our swing high. So from a 4-hour swing perspective, what would the expectation be? The expectation would be we pull back to form a swing high low, and we look for the continuation of that move to target that week 4-hour high. But as we know with multi-time frame analysis, it's not that simple. Why? Well, this is that daily supply level, that premium daily supply level. We've pulled back up to that level. We've had a very, very strong reaction. I mean, if you look at this, like big impulsive down, corrective move, typically you would expect this is just a short pause before it dumps lower, right? To take out the week daily low. Okay, but we don't know that it's going to do that for sure because this is a strong 4-hour swing low, and this is where this could hold, whether we come from here and we push up to the upside, or maybe we come lower into the extreme and then we go. Okay, so we don't know. But then also, just to complicate things a little bit more, we also have the 4-hour internal structure, right? Where we had a pullback here, which wasn't quite significant enough to be a swing pullback, right? This for me is just one bullish swing leg. This is just the internal structure. So then the internal structure shifted bearish, right? So we could just have the continuation of that bearish structure to continue to the downside. Any reaction from here, maybe just to come into that strong high. It's only once we actually get that bullish IBOS confirmed that then we can go, okay, the internal structure has realigned itself with the swing structure, and then we can target that high there. Now, coming into last week, we did have a break and closure below that internal low. So technically that is a bearish IBOS, and then that would have become the new internal high, but we failed to close above that. So this is kind of what I was saying in my pre-session analysis this morning, that it's kind of hard to read because we've come into a very, very high probability 4-hour demand zone because it led to a break of structure, it flipped this supply level, it has inducement, it swept liquidity, right? I've spoken about this at length in last week's videos. So this would be a good level in which you'd expect at least an internal pullback, or potentially the move that goes on there. You'd expect something. We corrected in here pretty much all of last week, which is why we got quite tricky conditions, where we had that battle between supply and demand. We built some nice equal lows. We got a nice aggressive sweep of those lows and a movement to the upside. But that movement to the upside didn't really follow through. It fizzled out, right? It rejected this kind of minor 4-hour supply zone, these buy to sell wicks. It failed to close above the internal high, and it's basically just a sweep of that high. So this is where you can make a good argument for the case to the upside. Well, we're bullish on a 4-hour chart. We're expecting a high low. We've come into a strong level of demand. We built some nice liquidity. We swept it. It started to look like we were having a nice V-shape to the upside. But then what happened? We didn't close above this internal high. It ends up looking like it's a sweep because it's a wick, and we started to retrace from supply. And overall, we look at the bigger picture. We've rejected daily supply. We've come down. We've corrected. It looks like we're probably just going to push down further. So this is where I'm like, I don't have high conviction for it to push the upside. I don't have massive conviction we're going to come to the downside because, like I said, the 4 hours bullish. We're coming 4-hour demand. We've had a sweep liquidity. But, my gut feel says just because of the recent momentum, because the daily's more powerful, and overall this just looks like a correction, and we failed to close above, I'm probably thinking we are going to come to the downside, at least down into here. But is that super high probability? No, because of the reasons I've explained, right? And that's where, I don't really have a high conviction, and you're not always going to have that, right? It's only going to become clear in hindsight, and that's why we wait for hindsight. Sorry, I did hide all of these, but bar replays made them appear again. It's only with the benefit of hindsight we'll know what plays out afterwards, and that's fine. But that's when the environments in which I try to wait for to risk my capital on are the ones where I have a bit higher conviction, or where there is at least enough risk reward for it to be worth me taking a trade where maybe the high time frames aren't super clear. Okay, and I'll get into that more as we jump into the price action for the session ahead. So M15, again, kind of similar to the 4-hour chart in that when we broke below this swing low, we only just about closed below here. So technically that is a bearish boss. So I am being 100% mechanical at that moment, right? This becomes our new swing high because that's the highest point that broke this low, right? That's the height of the pullback. And then we went on to break the low. So that becomes our new low. And then last week we then did break up and close above it. So the M15 for me is definitely bullish, right? Because it's 100% mechanical. But this is where you have to use a little bit of nuance in the back of your mind that, is that convincing? It's kind of just looks like a bit of a sweep. So, how strong is this low? Especially kind of as I just went through on the 4-hour chart, maybe we are just going to dump through here. I don't know. So that's why I said in my pre-session analysis, I am viewing it as bullish. This is the extreme demand. We are coming off 4-hour demand. We did sweep these lows. So I am happy to look for longs from within here, but I'm going to be a bit more cautious than usual, right? Because we have come up, we swept these highs, right? We mitigated this reasonably high probable M15 demand zone in terms of it's the extreme of that internal leg, right? We've come up into it and mitigated it. So I wouldn't be surprised if then that was a continuation of that move, right? After sweeping all of the buy-side liquidity above these highs. So this is where I can kind of see it 50-50, right? Especially when you see like we're kind of coming down with a lot of momentum. We have the bearish internal structure. to now, if this low is going to go, we would expect that bearish internal structure to hold, right? If it's going to take out the low. Otherwise, it's just an internal pullback to facilitate. It's just switch bearish to facilitate the swing pullback. And then if we can get that bullish IBOS, okay, now I have a lot more conviction because the M15 internal structure is realigned with the swing structure, and then we can take out the weak swing high, right? So yeah, bit of a tricky one because you kind of have to see both sides of the scenarios here, and this is where I'm open to taking shorts, I'm open to taking longs, as long as there is enough risk to reward, right, and you see enough confidence, okay? So this is where I've bar replayed it just before this session opened. There's obviously some very, very minor M15 supply here. It's like a 3-pip range. I don't think I even marked that out because really, after an IBOS, probably expecting a bit of a pullback, but I know on session open sometimes you can get a bit of a quick move and there may be decent RR to look down to here. Okay, and then when we come down to here, again, we can look for potential long. So let's play this forward and see what happens. So we come down and then we start to reject away. So I look left, doesn't make sense what we're coming off. Okay, there's some sell to buy wicks here. Okay, so I can see some minor M15 demand here. Do I expect this to be the demand that goes on to break the swing high if we're going to remain bullish? Probably not. Why? Well, one, it's just sell to buy wicks. They're quite small. It's more of like a 10-minute or a 5-minute zone. I don't read too much into these. There's no inducement. It didn't sweep any liquidity. So it's probably just to facilitate a bit of a pullback into this level or a 5-minute level to then continue lower into these levels here, right? So not really expecting much from this. Take a look at M1 at this point. Yeah, there's not much going on here. We pull back up to a 5-minute level. So if we have a look on the M5. All right, you can see that a little bit more clearly. Is that level on which I'm going to set a risk entry on? No, not me personally. It could have come up high, it could have come here. There's some nice inducement. Okay, fine, but there's not really enough to know that price was going to reject there. We do get an M1 confirmation entry, but it's a big candle. So, if you were to enter on the candle right here, stop behind the high, I need at least a minimum of 5-1 towards the low. You're not getting that there, right? So that wasn't personally something I was interested in, but you can understand why price comes into it and then continues to move to the downside, and then we get reasonably choppy price action. So this is why I'm not even looking at the M1, I'm just concentrating on the M15. So now we come into a bit more of this high probable level. Yes, you could have refined this down to this candle here, this POI, but you see how after that POI was created, price came into it and then the move happened there. So you could then also arguably refine your POI level to this level. But this didn't sweep, doesn't have the inducement, so I'm happy to just kind of include that whole range really, and that's why I was here, and then just wait for a lot more development either on the M15 or on the M1, right? And what I mean by that is looking for ideally price comes down, right, starts to build some nice incals, and then we get a chalk or something like that, right? Just a little bit more development to help refine it. So at this point we're coming to this level, so yes, I'm happy to start looking for longs as I said in my pre-session analysis, but you have to reassess how does price look when it gets there. Well, we have this M15 supply. This candle failed to break the previous candle's low. Okay, these were equal lows here. So this means there was a fractal pullback. So now we have this supply that caused a break of that low. So if you want to wait for a bullish chalk and supply fell, you've got to wait for this high to go here. And that's what I was saying in the analysis channel. And this moment, considering everything I've just gone through, right, how the higher time frames are, how I don't have super high conviction on this being that bullish on the M15 and this demand here, order flows quite clearly bearish, since Asia and since we've opened up. There's a lot of momentum. The overall higher time frames, daily, etc. I think this low could go. I'm not just going to jump into the first M1 entry. In most cases, especially when there's no risk reward up into the supply level, etc., etc. So I was just personally waiting for longs, waiting for this to go. Now, if we had to push down a little bit deeper and then say on the M1 got a nice big equals, big sweet V shape, okay, maybe I'll consider it because then I've got enough risk to reward to play that fractal pullback up to the supply level, and I can remove risk or take profits if that is going to be the move. But as we'll see, right, if I play the next candle forward, all right, we start to reject here. Well, you can look for longs, but we're already at this supply level. There hasn't been anything that clear in terms of the M15, in terms of sweeps or anything, right? So I'm just thinking it's just a fractal pullback, probably into the supply level to continue to the downside. Okay, and that's why I wasn't really interested on the M1, right? Because you can see here, as soon as we got the M1 chalk, what is it? Well, I appreciate the drawings are here, so it's a little bit messy, but it's just a straight movement down into here, right? Boom. So as soon as you get that M1 chalk here, you could long, but you're trading straight into here. You can see by the nature of price action, it's just an impulsive movement down. It's likely that's just going to be a pullback, and that's why you want to typically see price come in, do that, have a bit of a pullback, then sweep those lows, then you get that movement. Okay, that makes a lot more sense because we've had a proper liquidation of the recent price action. Yes, there is one here, but it's you can just see by like how price moves. I don't know if you need experience for that or what, but for me, it's just super obvious when I see that M1 chalk. Yes, it could play out, but I just view that as most likely going to be a pullback into this level. That for me is not a high enough probability trade to take. Okay, and for me, it was as simple as that. So I'm just going to wait for a bit more. And look, if it ends up being the move that goes and does this, okay, fine. Don't get FOMO. That's not going to bother me at all if that happens, right? And then likewise for shorts, we start to pull. I'll just show you on the M1 because it looks nice and clear on the M1, right? If we play this forward, like how it looks, super corrective as we come up into these levels, right? Build some nice perfect equal highs, and then what do we get? We get a rejection into the M1 extreme because obviously this candle here is already mitigated. This wick here is kind of the unmitigated extreme, right? We have some nice equals. We come into here. Nice V-shaped reaction, right? A lot of momentum, M1 chalk, the recent demand fails. Yes, there's demand here, which isn't ideal, but for me, if I loved the higher time frames, that would be enough for me to set an entry order on, right? I'd be happy to take the risk that, this M1 low could hold and I could get stopped out, right? If just purely talking about the M1 here, nothing else. Nice corrective pullback, tons of sell-side liquidity to target. This would be the week low, and that would be like a quick trade I would look for. If, again, I liked the higher time frames, right? That would be an entry model. Now, if you did like it, I typically want at least 5-to-1 risk reward towards the low. So obviously here you can only get about 4. So you probably want to enter on somewhere around there. Okay, but that's just the M1. The high time frames is what matters to me. And in this instance, all things considered that I've just spent all this time talking about, do I want to short from here against this demand, against technically the M15 trend being bullish? It's in the coming off the extreme. It's obviously in the discount. I can on the balance of probabilities, like looking at it. The momentum, the corrective nature of how we came into here, I could probably see it's going to roll over and maybe take out that low. But, you can hear by my language, is that the type of trade I want to be risking my hard-earned capital on? No. I'm like, who cares? For like, at least for me personally. Now, if your back's up against the wall with challenges and the stupid restrictions they put against you, then, it's your last day and you have to get it in. Okay, maybe fine. That's worth it. But, when you're trading serious capital and you're not bound by those, ridiculous restrictions and deadlines and things like that, that's when you have to try and make those decisions as if you were trading X amount of millions or whatever it is you plan to do. You have to be making those decisions now and installing those good habits now, right? And not caring about these moves and letting them play out and being okay with that and not getting FOMO, right? When you get to that point, I think that's when you will start to see real long-term consistency and progress, right? And if that means during some market conditions you have to sit in your hands for days, weeks at a time, then so be it, right? You need to be that stalker, that lion, that cheetah, whatever, who lies in the woods, who waits for the moment, that alligator, right? I don't know, I'm not a David Attenborough guy. I'm trying to come up with a silly anecdote here to say you need to wait for weeks at a time. Sometimes wait for that gazelle to come out, that thirsty gazelle needs a bit of a drink of water. Then you come out, then it's your time to pounce. Now you've filled up your belly for the next 3 or 4 weeks, right? That's how you need to think about yourself as a trader. Now, there will become the times where like 2 or 3 days in a row, you could be taking 2 or 3 trades in a session, right? Again, I wouldn't necessarily advise that, but it can be very, very active. And then there could be 3 days, a week, maybe even 2 weeks, maybe in 3 weeks where there's nothing that great. That's what separates the pros from the amateurs in my experience, okay? So yeah, there's a trade here. I don't even know if it plays out. Let's play this forward. It's still chopping around. So yeah, it looks like it may have got out or it may have got, I don't even know what's going on here. No, you would have got swiped out. And this is what I mean. Like, it's just not high probability conditions. It's choppy. It's a UK bank holiday. You're sandwiched between supply and demand. To be honest with you, how this session recap really should have gone, this video should have been about 2 minutes long. Would have just explained, we're coming in for longs. Let's wait for an M15 shock and supply fails. So at least you have some more structural alignment. Do shorts here make sense? No, they don't. There's no risk reward. It's not ideal. Is it high probability? No. Go and work on something else or look at another pair, tidy up your journal, do some back testing, watch some content, do something productive, right? These are types of market environments. We do not need to overcomplicate it. We do not need to force it. Do not be sat there staring at the M1. Okay? Hope you guys took some value from that, and I'll see you next one. Cheers, guys.